was how I should. I never took the time to lay my heart on the line. Ooh, 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 ooh,
This is a voice check. This is a voice check. We'll be starting in around 3 minutes. Let me know in the live chat if you guys can hear me a-okay.
Like a lion you ran, a goddess you rode, like an eagle you circle, in perfect purple. So how come things move on? How come cars don't slow, when it feels like the end of my world? Wanna shoot but I can't let you go. But when I'm cold, there's a light that you give me when I'm your shadow. There's a feeling you give me and never glow. Like brothers in blood, sisters who ride, and we swore on the night we friends till we die. With the changing of winds and the way water flows, life is short as the falling of snow. And now I'm gonna miss you, I know. But when I'm if you love someone, you should let them know. All the light that you left me will never go.
People killing, people dying, shouldn't hurt you. Hear 'em crying. Can you practice what you preach? Would you turn the other cheek? Father, 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 help us. Send some guidance from above. 'Cause right now people have me questioning, where is the love? The love, the love. Where is the love, the love, the love? Where is the love? Where is the love? Where is the love, the love, the love?
All right, let's get the show started. Good morning, good morning, good morning, good morning, good morning, guys. My name is Sean Dexter, and I welcome you back to the Mango live stream. I hope you guys are having a fantastic start to your week. I'm having a splendid weekend where I am enjoying this beautiful day and enjoying this beautiful Bitcoin price action. So we do have a lot to discuss today, and I want to be able to go through it all, but I also want to go through what you guys want me to look at. So let's start with an agenda for today. In fact, today I do want to start with the dashboard. We won't be spending too much time on the dashboard, but I want to take a look at a couple of things, mainly Hold up. Let me just pull up the dashboard. Okay, yeah. So I want to take a look at Bitcoin dominance. I want to keep an eye on Dixie, and we can see that everything over here is looking pretty much like we expected, right? That Dixie rally that everyone got really excited for and got kind of anxious about didn't really amount to much, because we kept talking about the 95 region key level, right? The 95 level, that until Dixie actually breaks that level, there's nothing really to fret about. Bitcoin dominance going up just like we expected. We'll go with that as well. US 30-year rising a tad bit, US 10-year rising a tad bit, pretty much going sideways. The Fed has been doing exactly what we expected the Fed to be doing for the entirety of this year. Posture one way, but act another way. And yeah, so far so good. Bitcoin doing what we've expected as well, rallying into the August September months, and now is recovering key levels into the October month, perhaps looking to have a massive move leading into the end of the year and the beginning of the year. So the agenda for today is we're going to be starting with Bitcoin, then going over Bitcoin dominance, then going over a few altcoins, and then we'll be taking requests from the chat. Speaking of the chat, let's go on over to the chat and see who we have here today. We have Krisha in here, we have Nikhil, we have Irvin, we have Paul. How's it going, Krisha? How's it going, Paul? We have Vishal, the big signal for the Bitcoin rally. The Vishal oscillator going off, pointing to $600,000 Bitcoin. We have Ollie in here as well. How's it going, Ollie? Ooh, by the way, for all of you guys who are on the C program, Ollie posted a really nice breakdown on Ethereum in the altcoin section within the seed charts or seed setups. Please go ahead and check that out, because I really think that when this entire rally, Bitcoin rally, is done, right, and we do see a rejuvenation in all coins, I think Ethereum is likely going to surprise a lot of people, right? At the moment, we don't have much Ethereum exposure at all, but we will be looking to build up that position yet again when we do see that signs. Ollie has a great analysis on ETHUSD posted in there, something to keep an eye on, because there's going to be massive opportunity for those of you who missed out on this Bitcoin rally that we've been building our trend trade on. There's no reason to FOMO. There's going to be more opportunity on Bitcoin to the upside, much more opportunity on the upside, but until you see the right signs, right levels, and everything fits into your rules, right, into your actual strategy, there's no reason to FOMO into a position, because as much as you feel like you're missing out, right, there's always going to be another opportunity that will show up in the markets, right? So always think about the next opportunity. One, if you're in a current opportunity that's already doing well, think about your next opportunity, because you need to have a game plan for what you do next. Or two, if you've missed out on an opportunity, think about what this could lead to next after this opportunity is over, right? This particular movement always leads to let me try and draw it out for you guys right over here on the chart. I know this is a bit of a ramble, but every action has a consequence action, right? Consequential action in the crypto markets, in every market, right? So if there's a massive rise on one asset, it might lead to a rise to another asset, for example, or it could lead to a short opportunity. In my opinion, we are going to see massive opportunities show up in the altcoin market after Bitcoin is done. Okay, so with that, what do you guys want to start with? Is there anything in particular that you guys want to start with? Because I'm thinking about starting with Bitcoin on the 4-day time frame, because we just closed the 4-day. If you guys want to look at something in particular, right, in particular, before we start with the 4-day time frame, I'm happy to do so. So let me know. Yes, Nikhil, we will be looking at BTCD. You shouldn't be deep in alts though. We've been giving the warning signs on altcoins for the past week now, right? There was very, very little reason to be too deep in altcoins. By the way, let me know if the music's too loud. I will go ahead and reduce it if so. I think my exposure to altcoins right now is around 1%. Actually, might be actually under 1%. Yeah, just barely crossing 0.5 now. Yeah, Ollie says Bitcoin 4-day time frame. I completely agree. The 4-day time frame is the time frame to be looking at the moment. We did something very, very interesting on the 4-day time frame that I want to go ahead and show you guys. So right over here, okay guys, on the dashboard, okay, we're looking at the 1 week time frame, right? So we can go ahead and switch on over to the 4-day time frame. By the way, remember, if you guys are using the free version of TradingView, you will not have access to the 4-day time frame, but we have provided the 4-day time frame for you guys for free at app.mangoresearch.co, right? You can create a free account and you have access to the 4-day time frame, the 2-day time frame, the 4-day time frame, sorry, the 1 day, the 2-day, the 4-day, and the 1 week time frame over here, right? These are pretty much the Mango time frames. If you're starting your journey, these are the only time frames you need to keep an eye on, right? Especially if you're busy with a full-time job, with your family, etc. These are the only time frames you should be keeping an eye on. I get this question a lot. Sean, what time frame should I be looking at? In my opinion, if you are learning, these time frames. That's it. Okay. We're looking at the 4-day over here, and again, on the free version of app.mangoresearch.co, you guys can turn on your Ichimoku, you guys can turn on your cloud, and you guys can turn on key Mango ribbon levels right over here too, right? But at the moment, we're only going to be keeping Tenki Kijun and turning off the cloud, okay? Keep it really, really simple. And what do we see over here, guys? What do we see over here? We've been waiting for this for a very, very, very long time. We just got the 4-day cross. We just got the bullish TK cross above the green cloud. It doesn't get more bullish than, I mean, it could get more bullish than this, but things are really, really beginning to line up now. A few days ago, we did see that confirmation of the 3-day bullish TK cross above the cloud under equilibrium, and we showed you guys how historically that has led to massive price moves in the past, like huge. The last time that happened, we got a 3-day bullish TK cross, right? It did lead to a 4-day bullish TK cross as well, and it then led to Bitcoin having a 3,000% move. We'll go ahead and look at that again today, right? Because this is the same signature, guys. Bullish TK cross on the 3-day, followed a few days later with a 4-day bullish TK cross, and Bitcoin surprised everyone by just going and going and going and going and going, right? With an eventual blow off top at $20,000. That was from $600 to $20,000. The last time this happened was Bitcoin at $600. Okay, is everyone following me? Again, guys, you guys can get the same view, right? The same view with our crypto Ichimoku settings already set for you. This is a very, very convenient way for you guys to keep an eye on the markets at app.mangoresearch.co. Create a free account and enjoy this. And big shout out to Mark for developing this, and he's made things so nice, beautiful, and snappy for all of us. Another shout out to Shanks as well for the actual trend trading part of the dashboard over here, right? Which, by the way, has been freaking calling it recently so well on so many altcoins. You combine what Shanks has done along with what Mock has done with so by the way, new feature that is still in beta, but we'll be releasing it out of beta very, very soon. It's available to all of you guys who are premium members, by the way. Click on the up arrow over here. It will show you guys only the Ichimoku triggered setups that are long, okay? And this thing has been literally been calling massive trade opportunities. The last time we saw this trigger on the long side on Bitcoin pairings only was, I believe, Secret, right? Secret was one of the few ones that it called, and Secret ended up doing a massive, like, 100% move after that, perhaps even more. It is pulling back now, so we can go ahead and take a look at it today to see if there's any pullback opportunity to enter this trade. I doubt I'll be entering this trade right over here. You guys can see Secret right over here by them. Looking at this one over here. It's already up 118%. Now that's not a reason to not get in, as we do know that altcoins can go and go and go and go, right? So yeah, we're going off on a tangent over here, but essentially the dashboard is coming along really well, and really proud of you guys. Big shout out to Mox and Shanks. You guys are beautiful members of the community. Glad to have you guys on board as Mango team members now. Okay, so yeah, with that, let's switch on. Am I looking at the right thing? Yeah. Let's switch on over to the charts now, because I do want to go ahead and take a look at Bitcoin on the actual 4-day time frame on the charts, because I want to go back and do a proper history of everything Bitcoin has done thus far, or rather since. Every single time that Bitcoin has had a bullish streak across on the 3 and 4-day, I want you guys to get an understanding of what Bitcoin could potentially do, right? And also the rest of the market, how they responded after Bitcoin had a move like that. Just taking a sip of my water. So Kusha says, Ethereum will punish those playing it on the low time frames. Yes. The theme has always been the chart that you play on the weekly time frames and the monthly time frames. Our big trade that we caught on Ethereum last year, right? We had a massive position on Ethereum, and the big trade came off the monthly time frame. Oh, is the music too low? I do apologize. Oh, it's too loud. Is that better? Krisha says no, now it's too soft. Right. It's so hard to fine tune these things. How about now? All right, cool. So let's continue with what we're talking about. So I do want to do a quick recap on key support and resistance levels, and this follows up with what we discussed on the last live stream, where we marked out these regions over here underneath us. This key support level coming in around $53,000 at the 4-day level, and around 51,600-ish on the weekly level, right? So we can go ahead and mark a zone right over there. Okay, so this is the zone we're looking at. We're combining the weekly level and the 4-day level, guys. If you guys missed that live stream, I really do recommend. I really do urge you guys to watch it, because you'll get an idea of how we come up with these levels. Now, the next level that we're looking at now, especially since we did close a 4-day candle, we essentially have 2 4-day candle closes above the zone over here, right? We got the previous 4-day candle coming in from the 4th of October, and now we got this candle coming in from the 8th of October, right? 2 4-day candle closes above the zone over here is literally the market telling us that, hey, the market is accepting prices at this level. So this zone has been claimed by the bulls. So what's the next major zone that the bulls need to claim before we can get ultra bullish towards like levels at around, maybe we could be looking at a 75,000 to 90,000? Well, I'll be looking at this zone right over here, right? We'll be marking out these candle closes. So it was this initial thrust towards the upside. Okay, then we had the continuation fake out. If you guys do remember, I did try to take a long at this level over here, which did fail. So that level over there was a massive fake out for continuation that we did not see continue. Then we had the downside move, and then we had this I don't want to call it a dead cat bounce. I know people are trying to call it a dead cat bounce. I don't look at that as a dead cat bounce. It is more so an attempt by the bulls to continue the trend yet again, right? And we failed right over there. That was the big tell that, hey, things are not looking good anymore, and we should be a little bit more cautious on Bitcoin and remove all bullish biases of Bitcoin until we do see more confirmation. This was around the time where we did start getting a little bit more I don't say bearish again, but we stopped trading Bitcoin entirely. We stopped going long on Bitcoin, and we started looking for altcoin opportunities. So that now becomes a key level, right? So this level over here, right, and this level over here. So now we can go ahead and mark that out as a zone. Okay, remember guys, another key level was this level right over here where we had the breakdown point, which is our support zone. So these psychological levels, right, where market participants have made key decisions and based their decisions off these levels to trade either towards the upside or to the downside during this consolidation, right? Those levels are going to be very important now as we revisit them. Can the bulls show us that they can claim these levels, or will the bears step in one more time, right? If the bears step in over here one more time and push price down, right, the monthly is going to have a very interesting picture. So we have to be very cognizant of these levels as we approach them on the 4-day time frame, on the weekly time frame as well. Does that make sense? So Krisha does have a measured move for Bitcoin that points to around 66,000, Krisha? 73,000, eh? Something like this. Krisha's looking at a pattern within a pattern. Within a pattern. She's looking at like some complex pattern that I recommend you guys go ahead and check out. She posted it in the Grove. You guys can join our Discord at themangoway.com/discord, right? Could someone post a link in the live chat? Yeah, that's pretty much what I have over here. 72,000 to 74. I have 73,000-ish. So yeah, 74k. B Corey says, caught the live and liked. Yeah, make sure you guys hit the like button. Hit the subscribe if you haven't yet. Alright, so Ollie says that CME, he mentioned something about CMEs. He's like, it looks amazing. Same as CMEs on the 2-day and the 3-day. Breaking up on the B bands too, and key resistance. Indeed. Bitcoin's looking really good over here. So this is what's going on the 4-day time frame. There's something else I do want to bring to your attention, guys, and that's on the oscillators, right? The last time I brought the oscillators to your attention, I was completely ignored, and people did not listen, and it ended up costing people a massive trade opportunity towards the upside. I did a specialized video on Bitcoin, right, a specific video on Bitcoin in regards to just these oscillators crossing at this region over here, where I essentially said that typically when Bitcoin does have a bullish cross, or rather I should rephrase that, when Bitcoin is bottomed out on the 4-day oscillators like this, right, you do see like bearish action on Bitcoin on the lower time frames, but there's not much more juice left towards the downside on Bitcoin before at the very least we see a relief rally towards the top of the zone. And I was calling $50,000 relief rally at the very least, right? There was a high probability trade, and we had mentioned a few things that, hey, it's going to take some time. It could take weeks. But if you're patient, there's a mango trade that you could be part of, right, after consolidation's over towards the top of the range. And when it does transpire, it's going to be a very strong green impulsive candle move, and that's pretty much what we saw, right? Green. Every candle just seemed green after that. And these are 4-day candles, guys. Just 4-day candles, so it takes 4 days for each candle to actually complete. So it's just bullish action after bullish action for that entire month. So we did see that, right? and now we're seeing another bullish signature, which is a 4-day bullish stochastic cross in the middle of the zone. So essentially we bottomed out, went to the top of the zone, and now we are holding the middle of the stochastic zone over here. If we can see continuation from over here, guys, I'm looking for the highs to break towards the upside, and at that point I'll be looking towards 75,000, perhaps even further up to 90,000.
So high up we never came down, never had a chance to take it slow. You hit me like a tornado, and I never knew the real you. I know that it's been a long and winding road, and I've been jumping over mountains for you.
I'll post my stock on my stochastic settings in the C chat, Julian, or in the Mango Grove as well. Okay, so now with that out of the way, I do want to look at the Ichimoku bullish TK cross, and I want to go back in history actually. Let's look at BLX. Okay, so you guys can see that on BLX it's not crossed just yet because Bitcoin has yet to close the next 4-day candle, or rather I think this will cross on BLX once we do close the daily. I'm not entirely sure though, we'll have to keep an eye on it. But yeah, the last time we had a bullish TK cross on the 4-day time frame was all the way above the green cloud, right? So cloud being green, price in equilibrium, above the cloud as well. Bullish TK cross was around the same time Bitcoin had a 3-day bullish TK cross, which was around here, guys, right? Around $600 to $650, and it was a very, very similar signature where we crossed bearish initially. Let's go ahead and take a look at this. We crossed bearish, right? Which is a bear call, right? But then the bulls tested it and reclaimed the level, right? It wasn't just a test and a rejection, because that's what the bears would want to see. When you see a test of a TK cross like this, you want to see it, if you're a bear, of course, you want to see it get rejected. But the bears did not see that. Yes, we saw Bitcoin like spend some time over there, but this candle over here, guys, was the big tell. Every candle after that started holding above the Kijun, essentially allowing the Tenkin to start angling towards the upside over the weeks to come. Then, which was today, we saw the bullish TK cross, right? So we had the bear cross and then the cross on the bull side. That's ultra bullish, guys, because the last time we saw that, where we crossed bearish and then crossed bullish again, was right over here. Similar signature. Let's look at that. Right, we had the bear cross right over here, guys, and then no follow through, the bull cross right after that. And what did Bitcoin do right after that? Let's go ahead and measure that. Bitcoin had a 3,000% move. 3,000%, guys. Okay. The weekly 200 moving average at that point was sitting at $2,000. So yeah, Krisha asks, what's $3,000 from here? Let's go ahead. Oh, what's 3,000% from here? Let's go ahead and test that, shall we? I think I'm going to need more space though. I love the song, by the way. Okay, I need way more space. Okay, no. I think I read that wrong the first time. Is that 2 million? What? Okay, that's, that's okay. We're not saying Bitcoin's gonna do this, all right? Let's say Bitcoin does at least half of this though. So that would be 1,500%, right? That would still be 1 million. Jesus. Okay, this is becoming like a Moon Boy channel at this point. But I think people are going to be surprised with what Bitcoin could do, okay? And be very, very, very careful missing out on opportunity while Bitcoin is giving the signs that it wants to go up, right? It wants to go up. It's literally telling you. Like, last time we had the monthly signals, we had the weekly and the 4-day signals, guys, when Bitcoin was around $10,000, okay? I was telling people specifically around September last year. In fact, that was one of the few times where Krisha and I posted a picture of ourselves saying long Bitcoin on our Facebooks, right? We don't use social media, or that kind of social media at the very least. At least I don't use Instagram, Facebook much. But I was so bullish on Bitcoin when Bitcoin was around $9,000, $8,000 at the time, because we were seeing all the signs come together, right? And then we saw the 4-day bullish TK cross, the monthly signatures, everything come into place. And I told this community, it's time to keep an eye on the high time frames. It's time to keep your eye on Bitcoin, because if you miss this opportunity, you're going to miss out on a massive move. And Bitcoin 5x from around $10,000 to $50,000, right? So it went up a bit higher too. Went up to around $65,000. Now, Bitcoin doesn't even need to go and do a 1,500% or 3,000%, right? What if it just does a 2x or a 3x over here? Is that an opportunity you want to just leave on the table? No, right? It's gold sitting in the corner of the room. Okay, so Bitcoin dominance. So I do want to take a look at that. Yeah. Fisher says, Shane Walter, I recall a macro hedge fund guy making a convincing case for Bitcoin at the 7-figure mark. Yeah, so if Bitcoin overtakes the gold market, right, or market cap, and then starts eating a portion of the bond market, and we discussed both of these ideas in the previous live stream, I could totally see Bitcoin sitting upwards of 7 figures. And then we start seeing the entire equity market also get repriced in Bitcoin terms, essentially fixing the entire everything's a bubble market that we are currently living in. Because now when you start pricing things in Bitcoin, suddenly everything's going to fix itself, right? A lot of the evaluations right now in the equity markets are due to the crazy low interest rates that we are seeing in the bond markets, and the crazy low interest rates that we are seeing in the bond market is essentially a manifestation of the Fed manipulation, right? And all of that starts getting fixed once you start seeing things get priced in a asset that has a fixed supply that can't just be printed and inflated away to manipulate other asset prices. Okay, yeah, to answer Paul's question, this is the inverted Bitcoin dominance chart. So if you guys just had to think about it intuitively, if I'm inverting the Bitcoin dominance chart, what does this represent to you guys, right? If the Bitcoin dominance chart is inverted, what is this representing to you guys? Exactly, Samwise says altcoin dominance. So this is essentially the altcoin dominance chart, and it's kind of showing indications of double topping over here and perhaps breaking towards the downside. Again, we don't know that just yet, right? Until we break this neckline right over here. I'm not sure whether I have that level marked. No. So right over here we have a actually we can mark out a zone right over there, because this is a level coming in from this area. So the last time we did something like that was over here, right? We had a double top like formation. Right now we're doing something very, very similar. We put in a lower high, even though on a candle closing basis we did put in a higher high, so keep that in mind, right? And then we broke the neckline, retested it, consolidated, and dumped again, right? So essentially this was depicting the fact that it was better to be in Bitcoin at the time than it was to be in altcoins, right? Let's say you had to choose only between Bitcoin and altcoins, and you did not have any option to go into USDT or just go in fiat or US dollars, right? Between the two, you're better off going into Bitcoin at the time, because keep in mind that a lot of this was bear market, right? This time around we may see a similar signature. Okay, people think that things need to repeat one for one, but they don't. Markets rhyme. They do not need to match one for one, right? So we could see a similar signature during a bull market. And if you consider how overpriced a lot of these altcoins have become when you price them against their Bitcoin value, right? You can see a case for that. You can see a case for people saying, okay, altcoins have had a lot of time in the sun now. We see a lot of institutional interest in Bitcoin. We're seeing a lot of sovereign interest in Bitcoin. We're seeing countries begin to get interest in Bitcoin. Now you're hearing rumors of Paraguay adopting Bitcoin as well. You already have El Salvador adopting Bitcoin as legal tender, right? The game theory has begun. Now, what happens when you take that one step further, and another and another and another, right? You could start seeing people FOMO into altcoin, or rather Bitcoin, from the altcoins, just on that idea or the narrative. The ETF idea too, I'm not sure whether that's going to pick up enough steam to cause this, but it could be a cascade of events. That could be one narrative, or another narrative could be people simply saying, or rather money just flowing into Bitcoin from global assets at a pace that altcoins can't keep up with, right? So altcoins could be going up against USD, but Bitcoin goes up that much faster, and in that case we start seeing Bitcoin dominance, or rather the inverted Bitcoin dominance chart, break down over here. So altcoin dominance break down and come back to revisit these levels, right? So money flowing from altcoins into Bitcoin, or more money flowing into Bitcoin at a faster, stronger pace than altcoins are receiving their money, right? Does it make sense? Any questions on that before I continue? So a measured move of this breakdown would essentially be it actually points to the bottom of the range over here. Yeah, Jayesh, how's it going, man? Good morning, good morning, good morning, good morning to you as well. Yeah, so this is going to be a key level, key zone for the altcoins to defend, guys. This breaking down over here is not going to bode well for Bitcoin or for altcoins. So Surv says, I'm doing small scalping with VET BTC right now, increasing my VeChain while dominance goes down. Might be wrong and misguided, but it's working. So essentially what you're doing is you're saying, hey, I'm going to collect VeChain because I believe that all coins are going to recover and outperform Bitcoin. This is Bitcoin dominance. Let me pull up the inverted chart right over here. In the long run, right? So you're essentially hunting for a higher low somewhere around here, right? So if you pull that up on the weekly or the monthly, you're looking for a really essentially ugly kind of ascending triangle, right? Where all coins do something like this, then break towards the upside, or they could break later too. Which is fine. That's your thesis, man. The reason I'm mentioning this is because you can't really say you're misguided. You're betting on all coins outperforming Bitcoin, which is completely fine. Especially if you're buying with USD, right? It doesn't really you're not putting on any real risk against this chart at the very least. But if people are trading with their Bitcoin stash and they're looking to increase their Bitcoin by using all coins as essentially a leverage trade, this breakdown over here could lead to massive opportunities, because you'll be able to buy all coins at much cheaper prices against their Bitcoin pairings, especially if Bitcoin is going up in USD and all coins are staying flat against USD, right? The only way all coins get cheap for you is if this chart breaks down. Vishal asks, hey Sean, if you get time, I request to add to the agenda a time where you've made a mistake recently and how you reacted to it and what you learned. Ooh, a mistake. Let's see. Most of my mistakes would have been execution mistakes. Like, I don't make trading Oh no, he goes on to say mistake equals invalidated. Oh man, I've been invalidated on trades a bunch recently, man. Like I take losses all the time. So in the seed chat, for example, the seed setups, there is a trade that I tried for the second time on the same coin, and I'm going to try again in the near future for the third time on that coin. I just don't know when. I need to get activated on that trade idea, but I recommend going ahead and checking out that. I don't want to name it on stream, because I think it's a risky coin to get into because there's a low liquidity on the charts and you need to have the seed risk management cheat sheet on hand. But not cheat sheet, the seed risk management tool sheet and the indicator with you, in my opinion, to be able to trade that safely. But go ahead and check out that setup I posted and my invalidation criteria, right? I had 3 invalidation criteria and I got invalidated on that trade, and Mock was talking about it as well in the seed chat. So yeah, go ahead and check that out. And how do I react to that trade being invalidated? Well, because it was a low liquidity coin, I spent like all morning and part of my afternoon slowly exiting that trade, right? Because that was a special case where I knew that, hey, this was going to be a chart that I have to be a little bit more careful on because of the low liquidity. Going into it, I knew what I was getting into, right? So I positioned myself accordingly, so that even under the worst case scenario, I'm going to be fine if I have to just sell into the market. But luckily, the worst case scenario did not happen, and I was able to sell slowly and surely. And you can kind of see my fingerprints on the chart as well, because there were certain times where we came and retested the 4-hour 10 SMA or the 4-hour 21 EMA, and I sold into that aggressively, right? I got that opportunity because the market, right? So let's go ahead and find an example. Okay, let's say you have a level over here and the market breaks the level and you get invalidated on your trade. Okay, and then the market starts bouncing back into that level. Okay, bouncing back into the level. You may have the inclination to hold on to your trade, okay, and be like, oh, this is going to recover and I don't have to take a loss on this anymore, right? Maybe it goes back up, right? And I don't want to miss out on that opportunity to take a profit. You may have that inclination, you may have those thoughts run into your head, but you got to stay true to your trade setup. You got to stay true to your strategy and your long-term growth as a trader, and you got to tell yourself that, hey, no, I was wrong. I was trading for this level to hold, right? As soon as that level was lost, I got to exit my trade no matter what. And the fact that this is coming up to retest that level is giving me an opportunity, and not just a opportunity to get out at a good level, but an opportunity that has liquidity. Because usually when you see altcoins rise, right, like that, there's suddenly liquidity on the order books, right? The bots and algos are putting liquidity on the order books to make everybody FOMO. All those emotions that you're feeling, the bots and algos are trying to get those emotions out of you, right? Because they are trading emotions, by the way. They are trading the weaknesses of human beings and amateur traders. They're trying to incite those emotions and get you to hold your position, get you to perhaps even buy more, right? But you got to be better than that. You got to say, hey, this is an opportunity for me, I'm selling into that, right? And this level could be the 4-hour 21 EMA, that could be the 4-hour dynamic if you're using it, could just be a horizontal, and you'll see that you'll see like me and other traders as well, but there were wicks over there against those key levels. Why? Because I was selling into those levels, right? And got out of the trade, took my loss and got out. So you have to get out, man. You have to just get out. And then let's say the opposite happens, right? Let's say it does not get rejected. There aren't traders over there who are coming in and to take advantage of that sell opportunity. Because you got to put yourself, by the way, Vishal, in other traders' shoes and think about what they are going to do, especially in the altcoin market, because there aren't too many traders trading certain altcoins, and all it takes is a few heavy bags to push the price down. And you got to ask yourself, hey, a key level was lost, a key level was claimed by the bears. What are the other traders going to do who are bullish on this asset now that price is coming back up to this level? Would they be looking to get out? Would they be looking to sell into that level, right? And if your answer is yes, that's even more reason for you to sell quickly into that before they do, because they'll be waiting for a little bit more liquidity to show up. Like, you have your order book, right? You have your order book over here. Oops, let me just draw that again. Let's say you have you're looking at the chart and you have your order book. Okay, you as a new trader, or as a trader with low liquidity, right, relatively, right, you see an order that you can sell into. Another heavier trader is probably going to wait for that order to thicken up. He may be looking for it to fill up to like 100 BTC before he can sell, or 20 BTC, doesn't matter, right? It's all relative. You, on the other hand, you'll be looking at, oh, that's 1 BTC, I can sell into it. Okay, I can get my 1 BTC and get out of my trade. So take that opportunity. As traders with smaller account sizes, I'm talking to all of you generally. I don't know what account size Vishal has, or any of you for that matter. If you guys have a low account size, you guys need to take advantage of that, because you do have advantages that other traders don't have, right? Play to your advantages. So you can get out of trades when you're wrong a lot easier than other traders. So use that to your advantage. Get out of your trades. Being wrong is completely fine. Does that make sense, guys? Right? Does that make sense? I hope that does, because this is a really, really important idea to grasp. That when the market gives you the chance to exit your trades, take it. Don't wait for when you want to exit, because you don't, its price could keep going down forever, man. And then so when you're trading, by the way, when you're trading, right, and you put on your trade, you go through all the steps that you need to go through to put on your trade, where you allocated a 2% risk allocation, right? And you feel like you're a professional trader now because you've set a 2% risk allocation to this trade, and you're in the trade and everything's fine. But now the trade starts going bad, okay? The trade starts going wrong, and it breaks the key level. And instead of getting out to take your 2% loss, you start saying, no, I don't want to take this 2% loss. That's going to hurt. I don't want, I'll wait a little bit. Maybe I can make it so that I take a 1% profit instead. And while you're waiting, price does this. The difference, guys, between this loss over here that you could have taken, which would have been a 2% loss, and then now you being forced to take a loss over here, suddenly doubles your loss. Now, you've doubled your loss, which is essentially like taking 2 losing trades in a row. All because you were too stubborn to take your loss when you had the chance. Now you've just doubled your losses. And then you're waiting for it to come back over here, right? Now you're like, okay, you know what? I'll sell here instead when it comes back to this 2% criteria. And it doesn't do that. It does this instead. It does this instead. And now you've doubled that loss, and it's become an 8% loss. So that's 4 losing trades that you've taken in 1 loss. How many of you have done that? How many of you have done this? I know I have. I've done this to myself, and it's been worse for me, man. I've turned this into a 16% loss, right? So like, it's painful, guys. Like, once you go through this, right, and you realize what an idiot you are, right? You're a genius in everything else in life, but when it comes to the markets, you're as emotional as everyone. Like, we're all human beings. We all make these same mistakes, which is why I've put together this proper risk management strategy for all of you guys in Seed, especially, to just follow it blindly, right? There you go. Krisha's like, me. Stanton's Sukla's like, I have today. There you go. You guys have no idea the kind of stupid shit I've done, where I've had to just go into a room all by myself, sit on the cold floor, and just lose myself for hours thinking, Sean, what did you just do? And it took me a very long time to recover from those kind of losses. But yeah, the trend trading, man, the trend trading really helped. Paul is like, my name is Paul, and I too have done this. Julian too. Like, this is what we need to protect against. All right, I keep harping over this in many of the videos where I say at Mango we don't attempt to make profits from the market, or rather, that sounds wrong. We're not focused on making money. We focus on the risk management, and we focus on taking our losses, and we learn to become champion losers, because the profits are just a consequence of us being champion losers. Because once we figure out that we just need to focus on being champion losers and take the 2%, take the 2%, take the 1%, whatever you set your loss to be, right? You focus on that, and that only. When you do get the win, okay? Those of you who have been following Mango for a while now, you guys know that this entire summer I had only 2 major wins, Solana and Bitcoin, right? Those are the only 2 big wins I caught, and they were so huge that all these 2% losses that I've taken mean nothing. But because I take these smaller losses quickly and efficiently, right, and I don't let them get to a point where they're like 16% losses, 20% losses, I have the ammo to make the Solana win count, to make the Bitcoin win count, and over time they change your life. You guys need to understand something about human psychology. You need to understand something that may sound very counterintuitive and very what's the word I'm looking for? Contradictory to what we want as human beings. We are risk takers when pertaining to losses, and we are loss averters when pertaining to profits, right? We feel an aversion to loss when we are sitting in profits, but we feel like taking risk when we are sitting in losses. Sounds like a paradox, but when you guys think about it deeply, you'll know it's true. It's one of the reasons, by the way, guys, that I have such a strong understanding on how to play downtrends, falling channels, right? And why I'm very careful with them, and why I take them under very certain scenarios, right? That big Bitcoin trade that we took over here. Let's go back to Bitcoin. This falling channel, right, that we took into the 4-day levels, and we saw the bear trap, etc. The reason I'm able to play these on both sides, right, is because I have a visceral understanding of being completely wrecked by trying to play falling channels. I've been completely destroyed by the market. It's falling channels where I've taken probably my biggest losses, which is why I tell you guys, a falling channel could fall forever and a rising channel could rise forever. You're referring to the risk of sitting tight in a losing position, right? Yeah, so let me pose a scenario for you guys. Let's say, okay, let's see, Julian, Paul, Vish, if you're still here, Ajesh, Krisha, I want you guys to all answer this question, okay? Let's say you had two options, okay? First option was, let's go, option A. Oops. I don't know how to write the letter A anymore. Option A was you receive a payoff of around $200,000. Okay. Option A, guaranteed payoff of $200,000. So it's 100%. Actually, you know, let's increase this number. Let's say you had. Let's keep the same number. It's easier to. I shouldn't increase it because it may not be relatable. I was going to say something like 2 million, but let's say $200,000. You guys have a 100% chance. If you trade option A, you'll receive $200,000 for sure. Okay. Or you could trade option B, okay, where you'll receive $1 million. Right? But you have only a 25% chance. What would you pick between these two options? Sam Adams says something really interesting on a different topic, and I want to get back to that as well. So Irvin says he'll pick option A. Cool. See you. Or Alexandru says also B. B. Sam Weiss says option A. Krisha says option A. Jay Constant says B. Cool. Stanton says today I will take A. Okay. Julian says he'll take 200. He'll take 200,000. Paul has a good answer, but that's not an option though, Paul. Paul says he'll take option A 5. Oh, I see. No, sorry. I thought I read the opposite. Oh, Paul had a witty answer. But I want to get to what I thought Paul said. I want to get back to that. All right. So this is interesting. Most of you guys have said option A, okay, and I think one or two people said option B. But now let's do the expected value, or rather the payoff of this, right? Of these options. If you were to think about it through a rational perspective, if the efficient market theory assumes that human beings are rational, right? That we're all economists at our heart, and we're always going to pick the most rational option. And if you think about the expected value of option A, it's 1 times $200,000, which is essentially $200,000, right? So the expected value of option A is $200,000. What's the expected value, guys, of option B? Is 0.25 times 1 mil, which equals $250,000. Right? So the expected value of option B is actually more than the expected value of option A. But we all choose option A. Why is that? If we are rational human beings, if the efficient market theory holds, we should always be picking the more rational choice every single time, right? And we should be picking option B, which is 250,000, because we have an expected value of $250,000. The payoff is more. The reason we pick option A is because of there are two facets to this. For the first facet is that if you're starting, by the way, this is also relative. It's also relative to the position you are in life. Okay, if you are starting with, let's say, a net worth of $0, okay, and you have the option to pick option A, right? You are going from $0 to $200,000. Okay, and that gain, that increase from $0 to $200,000 is a lot more. It gives you a lot more value. It gives you a lot more happiness and utility, right? That's the right word I'm looking for. It gives you a lot more utility. Someone going from $0 to $200,000 is going to get a lot more utility, right? Than someone going from, for example, 2 million. I'm going to write 2M to 2.2. Right, going from 2 million to 2.2 is not a big deal at all. You're not going to feel it. You're not going to feel it at all. But think about the utility that you get from going from $0 to $200,000. So that's one big facet that you need to take into consideration. The second facet is, again, when you're looking at these two options, especially the way I phrased it over here, right? A lot of you guys said, I will take $200,000 today versus the 25% chance I get 1 million. But that wasn't the question. You do get your 1 million today. You'll still get it today. Just that there's a 25% chance that you get it. But the reason you're thinking about today is because you say you want it now. There's an implicit understanding or meaning in that sentence where you're actually saying, I don't want to lose my chance at getting $200,000 today. That's what you're really saying. Because over here, there's an implicit understanding that you may lose your chance to get $200,000 if you get greedy for the 1 million. Right? So the human being, most human beings are going to pick option A, especially if you're starting with $0, because of that aspect of, hey, I do not want to lose that opportunity to get $200,000. Now, allow me to rephrase another example, okay? Not rephrase. Let me pose another situation for you guys. Another situation, okay? Now again, you have two options. You have option C and option D. Okay, in the first option, okay, you guys have and let me think. Okay, yeah, let's put it this way. In the first option, you guys have the opportunity to take a loss of $750,000, and this is a 100% chance to take the loss. In the second option, you guys have the opportunity, okay, to take a loss of $0, but there's a 25% chance of this happening. But there's a 75% chance that you guys take a $1 million loss. What will you guys do? Think about this for a second, and I will be back. Samwise says both options are horrifying indeed, and even still, life gives you these options where you have to pick between two bad choices, where they're all bad choices, and you have to pick the least ugly choice. I believe the Fed is sitting in that position at the moment, where they've not been given any good choices. They just have to pick between bad choices, and life is like this, man. So Hillary said something very, very interesting because of the framing of the way I put this, right? If I'd actually not done this bit, and I'd said $0. I'd said there's a 25% chance. There's a 25% chance that you lose nothing. There's a 25% chance you lose nothing. But. If you guys do lose, if the 25% doesn't go through, you will lose 1 million instead. Julian says, depends. If 1 million was my entire account, then I'd go with C. If I had much larger account, then I'd probably gamble on D. Interesting. Another stream transforming into a masterclass. Glad you think so, Paul. Glad you think so. So it's interesting. A lot of you guys picked D. In fact, most of you guys picked D. I don't think anyone picked C. Do you guys understand that you have literally picked this opposite of what you picked in scenario 1? Okay? Because let's reframe it into expected value, but let's keep it simpler. In scenario 1, you had a guaranteed profit. A guaranteed profit, okay, with a small chance to make way more, to make 1 million. Okay? So this was a guaranteed profit in option A, and option B was a small chance, or rather 25% chance to make 1 million. Over here, we had a guaranteed loss with a small chance to lose 1 million. But in scenario 1, all of you guys picked the guaranteed profit. In scenario 2, all of you guys picked the small chance to increase your losses. Huh? You guys realize, right, that if you ignore the numbers, you guys acted differently based on whether it was a loss or a profit. What does this prove? That when it comes to your profits, you guys are feeling averse to losing your profits. When it comes to your losses, what do you guys all show me? That you guys are feeling more risky. Over here, you guys weren't willing to take risk when it came to profits. But over here, you guys are feeling risky when it comes to your freaking losses. Which is why, by the way, all of you do this. Which is why I used to do it too. You guys keep waiting for the price to bounce, and you guys keep getting dumped on, and your losses go from 2% to 32%. Before you guys finally feel the pain and you're like, F it, I'm out of this. And that's when price will bounce on your faces, right? Think about it. In scenario 1, you guys had the option between guaranteed loss and small chance to make way more money, right? Option 2, you guys had... Sorry, I said that wrong. In option 1, you guys had the option between guaranteed profit of $200,000 and the option between a small chance of making way more, up to $1 million, right? In scenario B, you guys had the opposite scenario. It was only a loss instead. But you guys picked the complete opposite decision. All of you, including Krisha, right? So when you guys are acting a certain way, right, on the markets, you guys feel that those emotions to behave a certain way, understand that it is your human innate behavior that you need to battle, that it's going to come out from within you. And if you understand what's really going on, you'll be able to battle it a lot easier. Understanding that is so important. So Julian said, if it was $1 million, if $1 million was my entire account, then I'd go with C. If I had a much larger account, then I'd probably gamble on D. But no, why? Why would you say D over here? But in the first scenario, you went with A. Why were you more risky with your losses, but so protective with your wins? And if you guys think about it, this is the essence of being a trend trader and battling those emotions, right? When you're a trend trader, you're essentially picking between these two options, guys. In scenario one, you're picking between option 1 and option 2 as a trend trader. If you're a trend trader, you're always battling. Price could keep going or price could dump. So it's essentially, do I take my 200,000 over here, or do I wait for price to reach 1 million? This is essentially scenario A. Sherwin says, seems like I missed something massive here. I guess it all happened so organically. You can thank Vishal for the question that spurred this entire discussion. But I want you guys to all sit down and reflect on what we discussed today. Really reflect on it. Okay, so Sam Adams, by the way, he says, if it was below 20%, I think I would change to C, but 1 in 4 chance of avoiding massive loss versus difference between 750k to 1 million. So Sam, I think this sits very well with what you mentioned earlier, and I do want to read it out for you guys. If I can find it. Okay, so Sam says right over here, I would say I'm the opposite. I would say I always exit trades too early when in red because I lacked the confidence in my setup or was just ruled by fear. That last bit over there, I was just ruled by fear, right? I can tell immediately just by the sentence that you have been bitten by the market. The market has caused you to have some pain, and that pain is essentially clouding your decisions on every single trade moving forward. Have you ever heard of the phrase once bitten twice shy? Right? Once bitten, if you're bitten once, twice shy. What does that really mean? It essentially means that people who feel pain, it sits with them viscerally longer than a reward, right? This all sits in line with the prospect theory by the brilliant Dan K. But essentially, if you are rewarded, let's say $100,000 for a good trade, right? That behavior that you should get from the reward won't sit with you as much as a loss of $100,000. On the opposite spectrum, if you had instead lost $100,000, that pain will sit with you a lot longer than a reward of the same magnitude. So when you are conditioned with fear, it sits with you a lot longer and a lot more like viscerally than joy would sit with you. So behavior gets influenced a lot more through pain than it would through joy. And you guys need to understand that too, which is why you see a lot of people who were bit by the 2017 bull market and the dump that came after. You see them being completely ruled by their fear trading into this bull market. I was able to thank God I was able to recognize all of those emotions and research it and understand what was going on in my mind as well, and I was able to conquer it. It's really important for you guys to conquer those same emotions too if you guys have been through that pain, because that pain will scar you, right? Once bitten, twice shy, guys. Once bitten, twice shy. The pain that you feel in this market will sit with you longer and more viscerally than the joy that you will feel through this market. Sam Adams says, most definitely, haha, I know exactly what you mean. Indeed, man, because I know what you've been through. Krisha says, Sean is is an irrational human checker. Okay. By the way, I want to give a shout out to Wouter. Wouter, good to see you in here, buddy. Good to see you in here.
DJ Dark live in the mix.
Yep. So Sean says this is very relevant. It's the exact reason why I'm thinking about my link bag and the losses I have on it rather than my ETH bag, which has made me profits far bigger than the link loss. Yep, prospect theory, man. We feel the pain of losses far more than the pleasure from wins. So you guys have pumped the all, John. Good morning. Good morning, good morning, good morning, good morning to you, man. Yeah, but it was interesting, eh? We had a really good experiment over here. Sure, and I recommend you watching, rewinding the stream after we are done and watching this entire experiment. Or rather, case study. Krisha says, sometimes I wonder how many people are truly net short Bitcoin. Oh, geez. What's Bitcoin doing, by the way? Slothbag says, like the psychology talk. Unfortunately, most people don't like these kind of conversations. You guys can see that the views dropped from like 90 viewers to 60 viewers in the last like 15 to 20 minutes that we've been discussing this. I mean, not that I care, but if more people cared more about how the psychology of their trades mattered more than just like picking targets and levels, etc. Slotback says, sticking to a plan is tough. Doubting yourself is always going to happen. The thing is, right, there's no reason to doubt yourself once you have a plan put together, right? You just need to tell yourself that, hey, the outcome is not reflective of me as a trader. What happens over here is just random after that, right? I've picked a probability based trade. Like if you're saying that, hey, there's a 75% chance, okay, that this coin flips heads over tails. 75% chance that the coin flips heads over tails, and then it flips tails. Does that make you a bad person? Does that make you a bad trader? Does it make you a bad gambler that you picked heads even though there's 75% chance that it flips heads? You picked heads, right? And then flips tails. Is your wife going to leave you? Are your friends going to think you're stupid? Is there anything wrong with you as a person? Are you less intelligent? Are you less capable? Does your IQ drop by 25% 25% of your total points? None of that is true, right? But for some reason, as traders, we laud ourselves for successful trades, right? Each successful trade, and we punish ourselves and blame ourselves for bad trades, which should not be the case. The outcome of your trade is independent of you. All that you should celebrate is your ability to stick to your plan, right? Because if you keep taking this trade here over the long term, in the long term you will be successful. So your ability as a trader and your celebration should not be because of the outcome of your trade. Your celebration should be based on the fact that you followed the last 20 trades according to plan. That is how you judge your performance as a trader. Did you perform according to plan for the last 25, 50 trades, and keep track of that? The outcome is random. Hey Philippe, how's it going, Philippe? Owen says, I needed to listen to this. I'm glad it's helping, man. James Houston says, loving the stream, so relevant for me. It's relevant for all of us, man. We all go through this, and it's good to reinforce these ideas. Philippe says, Sean, how is it possible that you can erase your emotions so well during trading and at the same time have such a wonderful vibe? That's a hard question. You guys should look up my story on how I went from being a janitor to getting a master's degree to getting a 6-figure salary. And look it up, it's on Google. Just type Sean Dexter, how I went from janitor to 6-figure salary, to master's to 6-figure salary. And all of that to say is that life was very, very, very difficult for me. Like and that story is only like part of what I went through. Like I had a really hard childhood. Things were bad at certain periods of my long phases of my life. Krisha knows a lot of it. Of course, everyone has things that they can just never ever talk about. So I just think back to I think about how lucky and fortunate I am for the things I do have now in my life, right? So all of this is a blessing, man. Like, I'm having a weekend today while the rest of you guys are having a weekday. Right? I woke up today, I'm like, you know what, today's the weekend, F it, I'm gonna so like I'm in a very, very compared to what life used to be, like, it's just up only from my life, right? So I enjoy the good things. Like, I'm not going to win every single trade. I'm not going to markets are not always going to be bullish. They're going to be bearish zones, bearish opportunities, bullish opportunities. There's always an opportunity. Everything ends up being an opportunity, especially when I go through when I think back to everything I've been through in my life and what has come from it. And you hear people say everything happens for a reason. Sounds so cliche, right? But I don't know if I would have met the people I did in my life, like my best friend, my mentors. I would not have met them. Maybe I would have never met Krisha, even though we wonder about that because of how we just kept like geez, our story is so crazy. But it's just things I know. I don't know how to answer that for you. All I can say is that I try to wake up every morning and be appreciative of the stuff that I do have in my life, and it makes me feel, happy and puts us in this vibe. Vishal was like, gosh, what a great question. This is why we missed you, Vishal. You were asking all the right questions, even back before you disappeared for some random freaking kid that is showing up in this world. I'm kidding, man. Congratulations, by the way. I heard the good news. A lot of traders I know are so non-emotional. They are successful, but not fun people. But indeed, going through a difficult time, I know as well. You probably know how to appreciate things more. Yeah, man. No, I know what you're talking about. A lot of traders who do well because they've got their emotions in check. But there are also a lot of traders who are really fun in real life, and they may just not be fun online, I'm guessing. What I can tell you is that you cannot be a good trader without becoming a good person, because trading will expose all your weaknesses in life. It'll expose everything. It'll put it on a freaking platter for you and show it to you and put it in your face and be like, this is who you are. This is all the ugliness and puke and vomit and disgusting features about yourself. It's all there on a platter in front of the on the table in front of you for you to look at and be like, oh shit, I can't hide from this anymore, right? So as you go through your trading journey, that platter starts filling up, and you have two options. You can let the platter fill up to a point where you're so disgusted and revulsed by yourself, where you just leave the trading world because you don't want to face those facts about yourself, or you decide to start tackling all those negative things about yourself, and that's how you become a good trader. Because as you go through your trades, right, you start doing things that you would have otherwise said that no, there's no way I'd do something like that. There's no way I'd do something like that. And then you start realizing that, damn, I am doing these things. Okay, and it starts exposing you as a human being that you would have otherwise made excuses for in real life. Because in your social situations, right, it's so easy to blame everyone else, so easy to blame the situation, it's so easy to blame the context or your environment. There's always someone else to blame. But in the trading world, you have only you and yourself to blame for not following your plan. Because you'll have a plan laid out, you'll have everything, you'll have a strategy, you'll have the best indicators, you'll buy the mango dynamic, you'll buy the mango vine, you'll have everything, and then you'll realize, damn, I still acted like an idiot. And who do I blame now? Who do I blame but myself? Right, so then you start tackling those things about yourself. You tackle your greed, you tackle your emotional irrationality, you tackle your anxiety, you tackle the nervousness, you tackle everything. One by one, you start eradicating that out of your personality to be able to be a good trader, to be able to catch the big trends, to be able to buy support at support, to sell into resistance, all of those things. You need to fix yourself first, right? That's why trading, in my opinion, is one of the best careers any human being could pick. Especially for software developers, at least I can speak as for those of us in computer science and software development, etc. We we tend to have this feeling of being superior, and I don't want to say superior. Any problem that comes before us, we want to tackle it and solve it immediately, right? We try to make it into a mathematics problem, but trading is not just a mathematics problem. It's a human being problem. It's an emotional problem that you need to tackle. So we realize that, damn, as smart as we are, we need to be more humble. So trading will humble you. All right, boys and girls, I'll be wrapping up very, very soon. Oh, we should make Julian a mod too. Crypto Hillary, I'm just gonna call you Crypto Hillary, says, if you have a high probability trade, confluence of different indicators, what percent of your account balance do you put into your position? Do you always scale into your position at certain percent increments? That's the wrong question to be asking, Hillary. What percent of your portfolio is not relevant at all to you? That's not how you determine your position size. Okay, how you determine your position size based on the asset, the volatility of the asset, whether you're trend trading, whether you're because honestly, you could end up putting 150% of your, and I can't explain this in today's video because we don't have the time, but you could put 150% of your portfolio size. I'm not recommending this, by the way, as long as the risk that you're going to take after being wrong is 2% or whatever you allocate, right? 1%, right? So after being invalidated on your trade and taking your loss, you could have a 150% position size, which is essentially you taking leverage of 1.5x. But if your risk is going to be only 2%, that's your position size, right? So you figure out, okay, if I want to take a 2% risk on this trade idea, so you start with your trade idea, right? And again, those of you who are in the C program, you guys understand this more viscerally, right? If you use the risk management tool with the tool sheet that you get, along with the hypothesis driven approach that we have at Mango, right? You start with your hypothesis, okay, which is essentially your trade idea, and you say, okay, for this hypothesis, when am I wrong? Then you figure out your invalidation point. Okay, so now with my invalidation point, at this invalidation point, I want to be able to take a maximum, remember, maximum of a 2% loss. Okay, what position size can I have? And if this comes down to 150%, so be it. If it comes up to 5%, so be it, right? You have to trade your hypothesis. The crows are here. Bitcoin's gonna pump. So, Hillary, all that to answer is that you're missing certain fundamental concepts that you need to probably get in check first before you put on any more risk. We'll try to talk about this in the next stream. Oh, Hillary, you're on the seed program. Oh, this is that Hillary. Oh, okay. Once you get, okay, you're on the leverage trading module. Okay. So once you get into the risk management module, all of your answers will be answered. All of your questions will be answered. All of your answers will be answered. All of your questions will be answered. It's a 5.5 hour long module where I go through all of these ideas, like 5.5 hours of me just talking about all of this. You know, we should probably like take a snippet of today's stream and put into one of the sections. Philippe is like, patience, Hillary, it's coming. Yeah, Philippe just finished the risk management module this morning. So by the way, Philippe, I did get your PM. I have to give you access to the Mango risk management indicator. So shoot me your TradingView ID. Or shoot Krisha your TradingView ID, and she'll set you up right after the stream. Doug says, hey Sean, do you ever look at the profit to loss ratio when choosing a trade? What do you mean by profit to loss ratio? Oh, you mean that thingy that people do? This thing here? No, I don't use this, man. This thingy here? I don't use this because I trade, most of the time I trade trend, right? And I don't need to use this when trading support and resistance either, because I use the risk management tool and the tool sheet where I allocate everything prior. And as soon as I see, like, so if I'm trading support and resistance, you can just trade based on volatility, right? What am I looking for here? I'm trading support and resistance. I'm not going to take my loss. Okay, let's say I'm trading this support and this resistance. I'm not going to take my loss over here. Like here. On the second line over here. If the edge is only this much, right? If my loss, if I find out that my loss needs to be over here, just through eyeballing, you're gonna ask yourself, this is not enough, man. This is not enough edge. It's just, and that's how you get your 1-to-1 ratio, etc., etc. And you're gonna hear a lot of traders say, "Oh, I want a 2R, 4R." I mean, I don't use those terms. I think it's all unnecessary. You can just know that, hey, you know what? If you want this kind of edge, if you're trading something like this, your loss needs to be something like this, right? But what kind of trades do we take? We take trades where we go from somewhere around here all the way to here and further, where my wins are in like the 100%, 200%. Of course, this is crypto we're talking about, where it's possible to have these consistently, and my losses won't be that much. It'll be like somewhere around here. Or sometimes you get a perfect retest after, let's say Bitcoin broke down, right? Or likely got on a retest, or just taking the loss here. But look at the win that we get. Hillary, Philip says, Hillary, you're thinking ahead, and that's an extremely good sign. Yes, indeed. Yes, indeed. And I'm glad you caught the live stream, Hillary. I'm really glad you caught the live stream. I don't think I've seen you in here before, have I? Apologies if I've seen you in here. Hillary says, okay, I do not leverage trade. Yeah, you don't need to leverage trade. In the leverage trading module, by the way, you're going to see how we use leverage to our advantage, more for a risk mitigator than to put on risk, right? You can see a lot of people in the crypto community use leverage to put on risk, but we use leverage in crypto to actually take off risk, right? To take off counterparty risk specifically. And in my opinion, in crypto, you don't need that much leverage. You don't need leverage at all to make a lot of money. But you can use leverage to remove risk, to defer risk, and that's how we use it. So once you finish that module, you're going to understand that idea as well. Then you move on to the risk management module, and you're going to have a more holistic understanding of how we approach risk. When the trend is done, to answer Tran Nugent's question, so if once the trend is invalidated, right? So if you are trading based on a structural trend, the best answer for you, Tran, is going to be you watching my Solana series, where we were trading Solana from all the way down at $12, but there are videos that are packed together at around $65, then I believe at around $100, and there are 3 videos. I think we did one at either 150 or 200, but either way, we traded the trend over there, right? And I explained how that's a more practical example of when to exit a trend. But to answer your question briefly, let's say you're playing a structural trend. Well, you're looking at high lows, high lows, high lows, high highs, high highs, right? When does this trend get invalidated? Well, when you put in a low, 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 high, low, 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 high, right? So that's when you start a downtrend. But the uptrend is invalidated as soon as you take out the higher low, right? At that point, you either want to sell into the lower high, or you just want to exit right over here. So that's your invalidation of a structural trend. Or if you're trading something like the Mango dynamic, let's say for example Bitcoin on the Mango dynamic, you could just this is a simpler way to trade it, and there are advantages and disadvantages to both. You stay long above the Mango dynamic on each on the trend being green, and on each higher low, which is the test of the Mango dynamic right over there, you add to your position, right? And you keep staying long above, and as soon as you lose the trend, you exit. So this would have been your exit over here if you're using a indicator like the Mango dynamic or 21 EMA, whatever you want to use. So similar story towards the downside, right? If you got short right over here, you would have stayed short this entire time, added to your position over here, stayed short. Again, go back and watch this entire zone that we traded. Of course, I did not go short. In hindsight, would have been a good shot. Hillary's like, wow, I'm blushing. Thanks everyone. You should join the C chat on Discord, Hillary. PM Krisha, so we can give you access to all the C channels and start being active in there, because there's some really great conversations in there, like especially the Mango Lessons section and the Mango Sprout section. Both of those sections are great. I really recommend you take advantage of your access to the seed private channels. You're missing out big time. A lot of people have actually PM'd me and said that, Sean, I'd pay 5 times the course just for access to what we have in the seed chat, right? That's after they, of course, seen it. So take advantage of that. Like, don't waste it. No, yeah, exactly, Doug. No, in trend trading, I don't know when I'm going to be taking profits, and it's really important to brainwash yourself into not having any targets. It's hard, easier said than done, of course, but all it takes is one massive win that you did not expect to change everything. Vishal says, seed educational content pays for itself, folks. Indeed. And Paul said, the seed chat is gold. Yeah, the seed chat is really special. It's a special place, I can say that. So if you guys are on the seed program, I know some of you guys haven't replied to the email we sent to you right after you joined the seed program. Only a few of you, but if you guys are in there, make sure you reach out to us and talk to either Krish or me, and we'll try to get you into the seed private chat. Keep in mind, guys, that buying the seed program does not give you guaranteed access to the seed chat, because we do like to get to know you a bit, ask a little bit about you, because we do have like a vibe in the seed chat and we don't want to ruin that. Now, no one has been rejected thus far, but we just still like to get to know members. So FYI. Invest in yourself before the markets. Indeed, well said. Because if you just gamble in the markets, it's just going to give it all back to the markets. Sean says, see, chat is not simply a chat. Don't dare disrespect my chill out zone and for peace and education. That's awesome, man. Yeah, it's not just a chat. It's more like a family in there, man. Alright guys, we're hitting the 2-hour mark. I'll be wrapping up now. I hope you guys enjoyed the stream. I had a blast. It was definitely a different type of stream. We did not go over many charts, but we did go over some concepts and ideas that I'm hoping will sit with you guys for every single trade to come in the future. For those of you who are just tuning in, I highly urge you to rewatch the stream, to rewind the stream and watch the bit where, or rather watch from the point where Vishal asked his question and we went on a massive tangent on how we deal with losses as human beings, and it's gonna help you, believe me, for all your trades to come in the future. So this one stream has long-term value. Harmony 1. Let's go ahead and check out Harmony 1 actually. Harmony 1 is long against the trend. It switched long 2 days ago, but it's not done much. It's long against the USD time frame though. But then again, bullish Ichimoku setup on the USD time frame. That's interesting. What about the 12-hour long? You're up 20%. Flipped 4.5 days ago. We do have a pullback today, so that might be an opportunity. Go ahead and check it out. What about the 4-hour time frame? 4-hour time frame. So there's not. Oh, it's not. Maybe it's not. Okay, yeah. So it's the Ichimoku's bullish setup is not on Harmony 1. Okay, so this is really interesting. It's actually calling short on the dashboard on the on the lower time frames against Bitcoin as well. So I like this for a pullback opportunity to buy the high time frames, right? So we can go ahead and look at the charts now. Very interesting. This is the 1-hour time frame, looking droopy. This has broken out of a massive consolidation, but I'm not sure whether this is being played. Actually, Cloud is green as well. Uptrend, Ichimoku pulling back onto the Ichimoku, onto the Tenkin. 21 EMA, not too far away. What the 2-day time frame? Yeah, I think this is being played on the 2-day time frame. So yeah, any bid onto the Tenkin might be an opportunity to buy the higher low over the weekly. This is a weekly support level as well, so keep that in mind. Bounce with the Tenkin. Do you get another opportunity to buy the Tenkin? I don't think so. In fact, I think this level right over here is going to be held by the end of the week. Not even sure you guys are going to get this zone over here at around 20 cents. This seems like a breakout of a weekly structure. If we do hold, okay, how about this? If we do hold 22 by the end of the week, I think this is going to go up further. It's looking good on the higher time frames for sure. Breaking out of the structure over here. If it does see its continuation, likely going to make its way to around 37 to 40 cents, somewhere around there. Let's see what the 4 are saying. Testing the Kijun over here. If it holds this neckline right over here at around 21 cents, good. If it loses this neckline over here, that's like an M-like formation. Lower time frames are looking droopy, so keep that in mind. But this is a bit aggressive. Could have a falling channel on the 1-hour time frame. We'll go ahead and take a look. And this is the falling channel on over the weekly support, right? Yeah, we do have a falling channel over here, but it did lose the cloud, so this does want to see continuation in my opinion. Lost a cloud, getting rejected, may come down to test the 200 moving average over here and then see a bounce. So something like this. Break back into cloud, edge to edge maybe. Holding this by the end of the week is really important, right? So if this happens by the end of the week being somewhere around let's say the 16th to the 17th. So yeah, if we do something like that, right, and then leading the 16th, 17th close well, that would be really nice. Okay, so that's it, guys. I hope you guys enjoyed the stream. My name's Sean Dexter. I'll see you guys in the next one. I think we'll do a stream every 2 days, right? So we've done one today. We'll do one on Thursday next. I believe today is Tuesday. Yeah, so we'll do one on Thursday. Yeah, smells like an opportunity indeed. When you see that that signature where you see 4-hour downtrend, long on the 12-hour, long on the daily, that could be an opportunity. So keep that in mind, guys. Dashboard trick right over there. Hey, you're welcome, Chauvin. You're welcome, Hillary. You're welcome, Sam. You're welcome, Meso. And thank you, Paul. Thank you, Julian. Thank you, Chauvin. Thank you, Krisha. And the rest of you, Mork, if you're still listening in the background. Ollie, if you're still here. Vishal, for the great questions. Vishal, I'm looking forward to seeing you in every one of the streams moving forward, man. Zahir, if you're still here. Bye, Philippe. Shout out to you too, buddy. Thank you for joining in. It's always good to see you in here, Philippe. Yeah, now going towards this the end of the cycle, guys. Krisha's right. They're mid-cycle now. Time to be watching for opportunities against USD. Yeah, we look at EDC in the next stream often. Hit the likes, guys. There's not enough likes on this channel, on this video. With that, do the mango way, do the easy way, do the stress-free way. Ciao.